the BullHorn. I'm going to go all White Album on you. Everywhere there's lots of piggies. Yes, Europe still kind of a problem for the global markets. Now it's Ireland. Moody's downgrading.
Don't call them pigs. Come on.
P-I-I-G-S. I know it may be something that our European fans are not happy with, but we love acronyms. You've got Portugal, Ireland, Italy, Greece, Spain.
Sure.
Josh Brown, the reform broker, here to talk about what he's referred to as limoncello.
Sure.
L-E-H-M-A-N. How bad are the problems in Italy right now?
They're bad, but they're of a different character than the Greek problems, and I think people should understand, yes, it's a heavily indebted nation, 120% of GDP. However, a lot of the bonds and the debt are held by actual Italian citizens. Mm-hmm. It's a little bit less of a international incident, so to speak, when they get underway, start talking about haircuts and things like that.
Right.
It won't be pretty, but it's different.
Is there the risk of something that may not necessarily be all that problematic spiraling into a contagion because the market declares it so?
Yeah, well, look, you've got about 700 billion euros on the line in terms of French exposure, German exposure, other European banks that have either directly lent into Italy or are holding Italian bonds.
So unsurprisingly, at a time when Europe is once again, unfortunately, in the headlines for all the wrong reasons, and people are focusing on the Federal Reserve and whether or not there's going to be a QE3 with Bernanke appearing on the Hill, the dollar is weakened, gold is at record highs. What do you see playing out there with the dollar and with gold and how that works?
I think more interestingly than the dollar being in, than gold being in new highs, it's in new highs priced in euros, which is something that has gotten a lot of attention this week. What's happening right now on the street is they're rallying the gold miners, the junior gold miners, all of those kind of ancillary strong gold plays are coming back into the fore.
Right.
The traders are getting involved in those names. They see new highs in the metal itself, and they know there's money to be made around that.
Getting away from the the bad news with Europe and what that's meant for the broader market, you've got a stock like Google that has all of a sudden regained some momentum. Yep. Earnings coming out later this week. There's some optimism, amazingly enough, about Google Plus, that they might have maybe not a Facebook killer, but a real Facebook competitor as opposed to Orchid. What do you think about Google?
With Google, what everyone's surprised at is the quick adoption rate of Google Plus. It's 10 million people. Granted, they are using Gmail to kind of drive that, so there's some opinion that maybe it should have been a bigger number. But I think just the fact that there could be another entrant into the social media wars in the form of Google Plus is very exciting.
To wrap up with Netflix, because you mentioned them as well, I mean, they raised prices and there are users that are not happy, yet the stock goes up. Analysts still love it. I've joked over on Twitter that, if there was a news event that said there's going to be human extinction in the next 3 weeks, you'd have some sycophantic bull on Wall Street come out and say, this is a buy opportunity for Netflix because cockroaches will still want streaming video. Yeah. Does this stock ever go down? It's 70 times earnings.
What's interesting, the customer reaction was universally negative. They looked at it, the price increase, the way they're going about doing it, as almost a Trojan horse. Wall Street almost universally liked what it saw in terms of what this price increase will do for margins. They're also trying to get even further away from mailing out the discs. They want to get people using the streaming service. It's much more cost efficient for them. It's a much higher margin product. So it looks like it's another bullish thing for Netflix, at least on the surface at this point.